Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Craig Basinger, chief market strategist with Purpose Investments. We're here to discuss top-line insights on market themes from the month that will trickle into the latter half of 2022. And Craig, certainly the world is a much different place than it was when we started off the beginning of the year, and partly because of what we're seeing with geopolitics. Any thoughts around that and how regions are being affected differently around the world as a result?
Yeah, I mean, I think the world almost seems to be changing every week or every 2 weeks so far this year. I think we came into this year not expecting a fair bit of volatility, but nobody expected it to really kick off as soon as the ball dropped in Times Square and be pretty unrelenting since. And yeah, obviously the conflict in Ukraine and the invasion and the war caused by Russia is certainly contributing a lot to it. I think even though it's always hard to tell when you're there's no question that markets tend to overreact to the short term. I mean, that is a phenomenon that is evident across the board. And I think what people should be sort of keeping in mind is that even though we're seeing these big gyrations in commodities and inflation and other factors, if you fast forward sort of 3-6 months, a lot of these will likely fade one way or the other. And I think that's what people should probably keep an eye on, is not to overreact too much to the short term, especially when you're in such a news-filled environment.
Let's talk about the spike in commodity prices. That also seems to be impacting certain sectors of the economy different than it is others.
Well, yeah, I mean, obviously we're in Canada, so we have the benefit of having an equity market that, well, sadly doesn't have enough technology companies, but certainly has more of its share of gold companies, energy companies, resource companies, fertilizer companies, and with what's been going on in the conflict, that's really been feeding well into a lot of those names. So even though the U.S. equity markets are sort of starting to recover from it's their first correction since Q1 of 2020, the Canadian market's actually at its all-time high. So it's really been apples and oranges. It's benefited our market quite a bit. But again, I still fast forward and, will we have oil at $110 6 months from now? And the problem is, if we do, that just increasingly raises the probability that we're going to get a recession shortly thereafter. So, there's stuff that's good for Canada, I like to think in the short term, which is our market, that is, but a lot of those are sort of bad for the global economy longer term. And I think that's why we're probably going to see some of these things come back down. And I also think even though inflation is going to tick up with these spiking commodity prices, we're probably going to see that start to roll over and come back down as the year progresses.
And speaking of cost inflation, let's talk about what the next earnings season is going to look like. And not even just this particular earnings season, but what guidance is going to look like. Because at some point, we're going to have to start thinking about margins and how it's going to impair companies on a global scale.
Yeah, and I'll be first off. I thought we would get margin pressure sooner. In fact, last quarter or the quarter before, but it once again proves the fact that yes, there is cost inflation, there's wage inflation, there's pressure coming on margins. There's going to be one-off hits because of the conflict and sanctions and how that ripples through various corporations. But there's one other aspect that we have to remember, is that rising sales covers over a lot of bad things going on at the corporate level. So I think margins have remained very resilient even with rising costs, because top line growth has remained relatively stable. The problem now, though, is we're actually seeing growth slow down. I mean, the global economy, if you even went back 3-4 months, so even before the conflict started, this trend started to decelerate. But we have the global economy. The consensus was for about 4.5% growth this year. That's now down to 4%. And I think a lot of those estimates probably haven't been revised down since the conflict started. So I think that sort of global growth number is going to start to egg down, still positive, but certainly decelerating. And you put that in an environment with rising costs, I think that's when you're going to get these margins hit. Is it going to be Q1 margins? Maybe. It's out there, it's coming. We just, whether it's Q1 or Q2, it's certainly going to come. And I think, the trajectory of margin expansion or contraction is a very good leading indicator for what the stock market does.
Right. And it's also interesting, Craig, because at some point you have to think about demand destruction, right? If you consumers are only going to pay so much to a certain extent. I would imagine that would happen on the products and goods side. But services, it'll be interesting to see how much will people pay for airfare, how much will they pay for hotels when you're thinking about the cost of everything right now. I mean, anecdotally, we're seeing it everywhere. So, you wonder if like demand destruction will play a role in this as well.
Yeah, I think it's out there, and I think it's starting at the edges. And I mean, it's again very unfair depending on sort of your income level, how much demand destruction you experience because of inflationary costs. But we also have to remember, we've gone through this period where people have actually saved a lot more money because, again, I'm wearing a suit and tie today, but I haven't bought a new suit in a couple of years. And there's all these areas that we haven't been spending money, and whether we've been saving it or more often been buying more goods and durables and things around the house or renovations or houses. I mean, that's where all the money's been going. And I think also when that gradually starts to pivot back, I'm in the office today, it's getting busier downtown. When that gradually starts to pivot back and people start spending money on restaurants and going out and the like, I think that's, is still good for the overall economy, but it's going to be a big hit for a lot of the space of the economy that's really done well for the last year and a half. And I think that's going to be another headwind that, I think is going to weigh on markets and earnings as well.
All right, Craig, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.